Hey traders, this is Heather. Another amazing day in the market. So we're starting out with SPX. This is my 5-minute chart, and I just got to point some things out to you, okay? So right here, this was yesterday's closed. We closed at 75.53, gapped down 37 points at the open. We opened up at about 75.16. That was largely in part to Broadcom's earnings, which didn't go so great. Broadcom gapped down, I believe, 14 or 15% at the open, and that just kind of brought the whole market down with it. And would you look at what happened? Buyers stepped in and said, no, thank you. I will pick that right up for you. So we came right up here, filled that gap, traded sideways for a little while. Now, I actually thought we would stay right in this zone for a little while. So, or at least for a few more hours. I thought we were perhaps even going to close within this zone right here, because what we have right here, this aqua moving average, that's the daily 5. You can see it a little bit better over here. And then we've got this mustard moving average, that is the daily 8. I really just thought price would stay in this area for the rest of the day. But man, bulls were just not having it. Came up above the daily 5, and we ended up tagging, well, almost tagging 7,600. The high on the day was 75.98. Sold off a little bit into the close, but nothing too dramatic. So, man, what a journey SPX took today. Now, if you recall, the last time I was here and did a video with you all, what did I say? We can't really look for pullbacks to the daily 21 like we normally do in this aggressively bullish market. So what we need to look for instead, if we want to get long, is pullbacks to the daily 5, which we did get that yesterday, and pullbacks to the daily 8. We briefly were under the daily 8 today before just rocketing higher, but just wanted to point that out, that those are consistently two really good moving averages to pay attention to when we are in such an aggressively bullish market. So if they're not on your charts right now, I would recommend throwing them on there just so you know where they are, because they tend to be really good landing spots for the market. Just want to point this out. It's only 12 points away. The daily 5 is at 75.72. So should we get a little pullback tomorrow, and we could, that could be a good little resting spot for SPX. 75.55 is the daily 8. Also, right near a major psychological level of 75.50. So, if we get a more meaningful pullback, which, look, that's not that far away either. That's only 29 points away. That's totally within striking distance. Look in that zone, okay? Just want to point out, I reference this a lot. Trader's Almanac, Stock Trader's Almanac. Tomorrow, Friday, June 5th, is historically a bearish day in the market. Just because that's what tends to happen doesn't mean that's what will happen tomorrow. But I'll also point out that every single day this week so far has been correct. So if we do indeed get a pullback tomorrow, I would look for the daily 5 at 72 or the daily 8 at 55 to offer some support. Okay, I'm going to go back to my daily chart so that we can zoom out a little bit, look at a bigger picture, because tomorrow's Friday, end of the week. So I want to know where the weekly quant pivots are, and are we close to any of them? Well, spoiler alert, we are not. We are not close to those weekly quant pivots at all. In fact, where we closed today is right exactly where we opened up the week on Monday. So should we get a bigger move tomorrow in either direction, and I don't think that we will, but if we do, I want you to know where at least those first levels are. So the H1 is way up here at 76.90. It's a long ways away for one day. The L1 is down here at 74, we'll call it 92. I also think we're probably safe from that, but I want you to know where those levels are, because look, when a crazy move happens, we rarely get a heads up about it, right? So we could get a crazy move tomorrow. You never know, what sort of news could come out that pushes the market in a big direction, or in a big way in one direction or another. So just mark those levels just in case we do get a big move, 76.91 or 74.92. Just as a reminder, those levels are not targets, they are guardrails. So should price get up to that H1, you can use that as resistance and a place to short. Should we get a flush down to that L1, you can use it as support and a place to go long. Okay, you could sell puts at 74.90 if we get there. But like I said, they're not targets, they are guardrails. Okay. So that is that. June. Let's look at the June quant pivots, okay? Because we are in a brand new month. And let's talk about the historical tendency of June. Tends to be a little bit quieter. Now, historically, every single quarter has a rally, but the rally that we see in the summer is the weakest of all four of them, okay? Just tends to be a little bit more muted than the other rallies throughout the year. That's because historically, Wall Street goes on vacation. They're in the Hamptons, they're resting, and so there's just lower volume. Okay, there's not as much liquidity in the market, so we just tend to see a little bit more back and forth, a little bit choppier action, a little bit more muted action. And look, that really makes sense too. After this amazing rally that we've had, makes sense that we could maybe just see a little bit more back and forth, a little bit more normal market, not so aggressively bullish. So I'm actually kind of looking forward to that because look, I have a really hard time going long when something is up at +3 ATR. When the market is making new high after new high after new high, it's really hard for me to go long. At the same time, I don't want to go short, okay? Because there's nothing bearish about a new all-time high, okay? So it's hard for me to do stuff when price is just riding this +3 ATR line. So if we do start to see a little bit more back and forth, a little bit more chop over the next couple of months, I'm okay with that. I'm actually hoping for that. All right, monthly quant pivots. The H1 is up here at 78.31. The H2 is up here at 79.83. We have the L1 down at 73.81 and the L2 down at 71.45. Just a reminder, they are not targets, they are guardrails. 70% of the time, price stays within this zone. JC likes to call it the sandbox, in between H1 and L1, okay? When price leaves that zone, that's considered more of an extreme move, and typically that is when we see algos step in and move price back into that sandbox, okay? So make a note of where those levels are so that if we do get an extreme move, you can look and see if it makes sense to place a trade for a reversal, okay? Again, I don't think that'll really happen. I am expecting a little bit more back and forth, a little bit more chop over the next couple of months. So we'll see what happens there. Let's take a look at a couple of stocks as well, see what's going on there. Let me just change this chart over really quick. Apple, still on fire. Still on fire. It's starting to calm down a little bit, but look, it hit this fib extension that I've got here at 316 yesterday. That is a 1618 fib extension, so I think I can actually go ahead and take those fibs off now. If it does break through that, I would be looking for this snow line up at 325. We'll see if it can make it there, okay? Google's starting to sit down, although today it did have a great day. It was up almost 4%. But Google had a great run, and now it's coming off a little bit, okay? This could be a sign that things in the overall market are starting to settle down, okay? We'll see if it can get back above its daily 21. I don't necessarily think it's going to make another new high in the very near future, but you know, we might be able to get a little trade off of it if it can get back above the daily 21 and maybe build some intraday squeezes. It does have an OG squeeze on the daily chart, but in order for me to go long on Google, what I need to see on this squeeze histogram first is a yellow bar, just like over here. That shows me that momentum is starting to shift higher. So even though Google was up nearly 4% today, momentum is still showing bearish. So not ready for me to do anything with it yet. Let's take a look at NVIDIA. NVIDIA came down to its daily 21 yesterday, had a good move higher today, but let's see if it can hold that daily 21 before making it up to, I have a fib extension up here at about 240. Also, actually I have two fib extensions, excuse me. I have a 1618 fib extension that was from an earlier set of fibs, has not been hit yet. That's at 241. I have another 1236 fib extension. That's from this move right here. That's at 243. And we also have a snow line at 242. So look, when you have a cluster of levels like that all together, some fib clusters and a snow line, sometimes it ends up being a good target. So I think 240 is probably the next move for NVIDIA. When it makes it there, I don't know, we'll see, because if we are about to enter into a more quiet market, might take it a little bit longer. But just to give you a little bit of extra context, the weekly ATR is 15 points. That target is about 22 points away. So yeah, look, maybe it makes it there by the end of June. I would say if you wanted to use that as a target and actually get into a bullish trade in NVIDIA, I would say go with the July monthlies. This is interesting too. Even though momentum is going lower, be helpful if I could talk. Momentum is going lower on the squeeze histogram. However, it entered its first day in an ideal squeeze. So that's something to watch as well. I like NVIDIA. One last point that I want to make before I say farewell. Today was a historical day, especially if you have a small account, because as of today, according to the SEC, the PDT rule, pattern day trading, has gone away. That means, according to the SEC, if you have less than $25,000 in your account, you are no longer restricted on day trades per the SEC. Now, I keep saying per the SEC because ultimately it is still up to your broker, okay? And each one is a little bit different, okay? Tastyworks, they did away with it today. The first day that they could do it legally, they said, okay, we're doing it. I believe Fidelity also did away with it today. If you are using TOS to trade, Schwab will allow day trades for small accounts starting Monday. Okay, so double check with your broker, make sure that you're not violating your broker's rules, but this is really, really fantastic for anybody with a small account that hasn't been able to trade spreads, because now you're going to be able to. Spreads are a great way to grow a small account because it just gives you a little bit more of a safety net. It also allows you to trade larger stocks like Bloom Energy or like Tesla or like Nvidia without having to risk too much of your account, right? It kind of lowers your risk a little bit, but yeah, it really just, it gives you a little bit of extra cushion with those spreads. So I'm really happy to see that go away. That said, I want to point something out, okay? Risk management is still key. Just because you can do something new doesn't necessarily mean that you should. And I definitely don't think that you should be changing your strategy entirely. Don't do a complete overhaul of your strategy just because you can, all right? Dip your toes into the day trading thing if that's something that does interest you, and lower your risk. Okay, so one thing that I talk about all the time is that I have different levels that I am willing to risk depending on how long I'm in a trade. So the less time I plan on being in a trade, the less money I'm willing to risk. So just as a rule of thumb, if I'm going to be in a swing trade for, let's say, 3, 4, 5, 6 weeks, I'm willing to risk up to 5% of my account. If I'm going to be in a swing trade for, let's say, less than 2 weeks, I want to keep it closer to like 3% of my account. If it's a day trade, well, then I like to lower my risk to about 2 to 3% of my account. Okay, keeps it safer. When you're in a day trade, yes, you can make money quickly. It can also go against you very quickly. And that's why I like to lower my risk. So if you have been restricted before because you have a small account and you plan on dipping your toes into the day trading thing, just keep that in mind. Lower your risk for those day trades. Okay, that is what I have for you all. Thank you so much for joining me. Make sure to like, and we will see you in the trading rooms. Thanks, traders.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me